You can build the exact same money system banks use and point it directly at yourself. Here's how it works. Every loan you've ever taken, car, mortgage, credit card, the bank used your deposits to fund it. Borrow cheap, lend expensive, keep the difference. That's their whole business. 3 strategies today that flip that equation. The profit goes to you instead. 5 minutes. Let's go. Before we get into the strategies, let's talk about what being your own bank actually means. It doesn't mean hiding cash under your mattress. It means building a system where you control the capital and you collect the returns that normally go to a financial institution. Banks make money in one simple way. They borrow at a low rate and lend at a high one. The spread between those two numbers is their profit. Your job, using these 3 strategies, is to capture that spread for yourself. Strategy 1. The infinite banking concept. This is the big one. The strategy that has a cult following for a reason. Here's how it works. You open a specially designed whole life insurance policy, not a standard one. A dividend-paying policy structured for maximum cash value growth. Over time, that policy builds up a cash value account. Think of it like a savings account that's also a life insurance policy. Now here's where it gets interesting. You can borrow against that cash value at any time for any reason with no credit check and no approval process. You pay yourself back on your own schedule, and while your loan is outstanding, your full cash value is still sitting there, still earning dividends as if you never touched it. So the money is doing 2 things at once. It's out working for you as a loan, and it's still growing inside the policy. That's the mechanism banks use. Now you're using it for yourself. Strategy 2. Self-directed lending. This one doesn't require a life insurance policy. If you have retirement savings, a 401k, an IRA, or just a taxable brokerage account, you likely have more lending power than you realize. Many 401k plans allow you to borrow up to 50% of your vested balance, up to $50,000 at a low interest rate. The interest you pay goes back to you, not to a bank, to your own retirement account. Now, this strategy comes with rules. You need to pay it back within 5 years in most cases. If you leave your job, the timeline tightens. And if you default, it's treated as a distribution, which means taxes and penalties. So this isn't a casual move. But used correctly, to bridge a short-term gap, fund a business, or avoid high-interest debt, it's a powerful tool most people never use because nobody told them it existed. Strategy 3. Become the lender. The first 2 strategies are about borrowing from yourself. This one is about lending to others and collecting the interest. Private lending is how experienced real estate investors and high-net-worth individuals grow wealth quietly. You pool capital, either your own savings or funds from a self-directed IRA, and lend it to borrowers who need short-term financing. Fix and flip investors, small developers, business owners, they pay you interest, typically anywhere from 8% to 12% per year, secured by real estate or business assets. You are now the bank, collecting monthly payments, earning the spread. This isn't risk-free, no investment is. Vetting borrowers and understanding the collateral matters enormously. But the structure is simple. You lend money, they pay you back with interest, and the asset secures your position if they don't. So let's recap. 3 ways to be your own bank. 1. The infinite banking concept. Use a dividend-paying whole life policy to create a personal lending facility you control. 2. Self-directed lending from your retirement account. Borrow from yourself, pay yourself back, keep the interest. 3. Become the lender. Use private lending to earn the kind of returns banks earn, secured by real assets. None of these are get-rich-quick schemes. All 3 require setup, discipline, and in some cases professional guidance. But the concept at the core of all 3 is the same. Stop sending your money to a bank and start keeping it in your own system. If you want a deeper look at how the infinite banking concept actually works, the policy structure, the numbers, the things advisors don't always explain up front, that's the next video. Subscribe so you don't miss it.